clearly some of the macro data is weakening. And as you mentioned about inflation and consumption numbers as well, and we'll get more data this week. But what we saw was a very unusual thing. And if I look at the Microsoft earnings, when the Microsoft earnings came the week before, on the earnings, the stock dropped 7%. And then AMD earnings came and the stock rallied 5% because AMD said that the demand is still strong. That just doesn't tell you that there's conviction in the market, whichever way it wants to go. Now, if you park that aside and look at where the NASDAQ is, NASDAQ on an equally weighted is flat for last 3 years. So where is this thing about bubble or tech bubble? I just don't see a tech bubble. Yes, few stocks have done well, and they have done well on earnings that they have delivered. So if you have 100 stocks and 7 of them are doing well because they have delivered earnings, that's fine. There are 90 other stocks which haven't done well. So I do not see any reason to be concerned that you're going to enter a bearish pattern where market is overbought and therefore people are going to sell. I just don't see that pattern. As I said, on equally weighted basis, NASDAQ is flat for last 3 years. And if you move to S&P 500, then we are barely up 10% since December 2021, because 21 to 23 December, as you know, was 2 flat year. So, or even on S&P on an annualized basis is up less than 4% per annum over last 3 years. And NASDAQ equally weighted is flat.
Manish, there are multiple scenarios here, from flat for the rest of the year with volatility, weaker trade into year-end or higher from here. As you take stock of the extent of the sell-off that's taken place still in some sectors, do you see a buying opportunity? Is there a rotation naturally in your mind to take place?
Sure. So for me, I am a more medium to long-term investor, and I say that if you're a medium to long-term investor, then you embrace volatility. If you get a 5% move or 10% down move, and if you have cash to deploy, you deploy cash. So for me, those views haven't changed at all. I do think that you will have a bit more volatility for the month of August because that's the seasonality pattern as you see in the chart. We had very similar thing last year. If you look at, if you superimpose the graph from this year to last year, we're almost following the same pattern. Maybe this time we have started the sell-off 2 weeks early, and then we saw recovery immediately in the same week. But this is no different than what you see in a US election year where you have a seasonality around August and September, and then post-election, the market starts rallying. But again, those are just chart patterns. But for me, as a medium to long-term investor, as I said, I do not see market has been overbought. I see that there is earnings coming through. You saw the US GDP number, which is still at over 2%. Inflation is just not a problem. And I think Fed is just wrong to keep the rates so high. And if they move from 5.25 to 5% or even 4.75%, the rates will still be tight. We're talking about federal fund rates at 4.5% and over. So the rates are tight, and I think that Fed knows that rates are tight, and I think they're going to ease. And I will be in the camp that they should be easing 50 basis points at the September meeting.
Yeah, and then the question becomes, how many more do they do after that? Because, you know, the first one might signal to the market that there's perhaps a little bit more panic that the Fed is actually feeling. I don't know how, you know, your sense on that, because I want to get back to market picture in a minute. But very quickly, does that give you a sense then that they would have to cut again consecutively 25 basis points then in November and then December again?
Not necessarily, because look, if they were cutting when the rates were 3 and you didn't have enough headroom, and if you did 50 basis point cut, then yeah, that would seem a sense that you're panicking a bit. But when you're at 5.25 and you're cutting it down to 4.75, if an alien came from outside and looked at it, they would still say the rates are tight. So in my opinion, I don't think that's a sign of panic. And you will have to look at the data. What is happening to the data? You have seen a clear slowdown in data. You look at the jobs report. All the previous jobs report are getting revised down. What is that telling you? That, you know, that we are seeing an increase in unemployment rate. So how long is Fed going to wait? I mean, they're not going to wait for the 2s and 10s to steepen once again before they start cutting rate, which is a sign of recession. And we are nearly there, 10 basis point there. So in my opinion, cutting 50 basis point will not indicate panic. And from then on, they don't have to do 25 basis point every meeting. But if they were to do, I don't think that market will see that as a panic. They'll be see that trying to avoid a recession